to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. Using proven tax deferral strategies such as the deferred sales trust is an amazing way for you to defer capital gains tax, eliminate the need for the 1031 exchange, so you can create and preserve more wealth and get timing back on your side. Don't get stuck in a 1031 where you're rushing around with your hair on fire. Check out the deferred sales trust by going to capitalgainstaxsolutions.com. Hey, I'm excited by our next guest. And in fact, each and every episode, we're joined by some of the best financial wealth, business, and sometimes tax minds in the world, where they share their ideas, deal stories, and inspiration. So together we make complex tax deferral strategies simple and passive income plans achievable. And I'm especially excited about our guest because he's out of the great state of Wisconsin. He is not a Packers fan. However, he is a CPA. And he is passionate about small business tax savings. He has a podcast on that called the Small Business Tax Savings Podcast. And he's an accomplished professional dedicated to helping business owners achieve success. Again, he's a licensed CPA. He has extensive entrepreneurial experience, having been the CFO and co-founder of several companies throughout his career, and so much more. We're just gonna dive right in, Mike, and I'm gonna let him pronounce the last name because I'm gonna butcher it. Mike, how are we doing today, sir?
Hey, Brett, how's it going? Thanks for having me on.
Absolutely. And for our listeners getting to know you for the first time, to give us a little bit more about your story and your current focus, and also how to pronounce your last name.
Yeah, so the last name's Jesowshek. It's always a mouthful, but kind of have an interesting background. I started out at a young age getting into online marketing and more specifically digital marketing at a really young age. And so really this idea of being an accountant was just kind of a fallback plan. If something doesn't work out in what I was doing, I had my CPA, I went to school for accounting. So I was like, that's where I was going to end up. And so started my first business at the age of 14, sold my first business at the age of 18, and then as I was going through college, I was continuing in that online marketing space. I finally got to a point in 2013 that we had a group of partners in a digital agency that all kind of wanted to take the company in different directions. And so we decided at that time that the best way for us to all move forward was just do what we were best at. And that's when I really went from the finance side of that kind of unique online marketing space into starting my own firm back in 2013. And back in 2013, we were 100% cloud-based, and accounting firms being cloud-based wasn't very common back then. Now, obviously now after COVID, it is much more common, but I would say that we were on the forefront of kind of this idea of a remote, online, 100% virtual-based accounting firm. And so as part of that, got into different pieces of software, different things like that, and have been kind of running that firm since 2013. Recently, about 5-6 years ago, started a podcast, and now have focused my attention, at least my day-to-day, on our podcast, as well as a new software that we launched. So all that to say is started in online marketing, now an accountant, now kind of getting more into that marketing piece, that's that podcast side, blog posts, those types of things, but focused on tax savings. And
awesome, so Mike, absolutely love it, man. This is going to be cool to geek out with you here because there's not a lot of folks that have the marketing and the tax. I feel like I'm kind of in that world, right? And, that's what we're doing too. And, without education and inspiration, the ideas can fall flat and people don't take action. So you got to have both. And so this is where it's going to be a cool way for us to connect here. And if you're listening and you want to learn more about Mike, you can go to taxsavingspodcast.com. That's taxsavingspodcast.com. But Mike, before we dive into minimizing tax for small businesses, which is the topic for today, I do want to take one other step back. I believe we've all been given certain gifts in this life, and these gifts have been given to us to be a blessing and help to others. So what would you say is that one or two gifts or superpower you feel like you were given maybe at a younger age? And how does that help how you help and bless people today?
Yeah, I think, one of the biggest one is just having efficiency. So I tend to be able to get a lot of things done in a quick amount of time. And so working with our team members, that's a lot of what I do as well, is guiding our team members and saying, how can we look at what you're doing and just make it more efficient? So that's something I've been gifted with from the beginning. And just this idea of constantly looking to say, how can we improve? So even after I've completed something, working on improving something, how can we get even deeper on that? And so when we look at tax strategies and we look at tax planning, it's that concept of saying, hey, I'm not good where I'm at. I'm happy to be here, but let's say, how can we expand this more? How can we get deeper down this road? And that's been a lot of my passion.
Perfect. Yeah. Continuous improvement and efficiency. Absolutely love it. You're speaking my love language, my business love language here, Mike. And so let's dive right into the topic at hand, which is minimizing tax for small business. So Mike, what is the number one secret to minimizing tax for small business?
Yeah, I think when we look at tax savings for a small business owner, I like to start with this core concept. And this core concept is after tax versus pre-tax spending. Because as a business owner and those in real estate have the same advantages to them, but the government gives incentives to business owners. Now, they don't go out there advertising. They don't go and knock on your door and tell you, hey, by the way, you should take advantage of this and you should do this. But they're out there. They're in the tax code. And it's up to the business owners to learn them, understand them, and implement them. And so when we look at the bulk majority of tax strategies that we look at least from a basic level, strategies that are available to you regardless of where your business is at, we look at this concept of pre-tax versus after-tax spending. And after-tax spending is basically what W-2 earners have. You have your gross wages, all these taxes get taken out, you have your take-home pay, and then you go out and buy a house, you pay for things for your family, your kids, your everything else. That's all using money that's already been taxed, using after-tax dollars. But when we flip the switch and say, okay, let's look at this from a business owner aspect, you have your sales or your revenue that's coming into the business, and then you have all these expenses, and then whatever's left over is your profit, and that you get taxed on. So any spending that you do within your business is all considered pre-tax dollars. And so a lot of the planning that we do is taking this concept and digging deeper, saying, how can we move spending that we're going to do already, from after-tax spending into pre-tax spending? So many accountants will say, oh, it's the end of the year. Go buy a car that you don't need. Go buy a new piece of equipment that you don't really need. And all that's great. If you need those things, those are great planning opportunities. But that's not what I'm talking about when I'm talking about moving after tax into pre-tax spending. It's saying, look at the spending that you're already doing and how can we find a way to get that inside the business and look at it from a pre-tax spending aspect.
Okay, great. So yeah, we're talking with Mike, and you can go to taxsavingspodcast.com to learn more about Mike. He's a CPA and minimizing tax for small business. So looking at what you're already spending and figuring out ways to potentially spend it in your business, because that's going to help you to lower your overall taxable amount per year. Is that a fair summary of what you're saying so far, Mike?
Exactly.
Okay, perfect. What is the number two secret to minimizing tax for small business?
The other piece is this understanding of learning versus implementation, because I think that a lot of times, I'm a podcast guy. I listen to podcasts. I'm on podcasts, and I learn a lot of things. Every time I'm driving, I'm listening to a podcast. But I also am saying, like, oh, that's a great idea. I need to do that. And then I get into my office and that idea is gone. And so the concept of learning is so important. And I do a lot of learning, but the piece that I see a lot of business owners stop at when it comes to tax planning is this implementation piece. So it's taking what you've learned and now implementing it the correct way. And as you kind of know in your business, when it comes to tax savings, you got to dot your I's and cross your T's. If we're looking at a strategy, we can take a strategy that's completely legal and implement it wrong, and now it's being done illegally. And so I think that first off, when we look at small business owners, we need to focus on this idea of learning. That's great, but that doesn't provide any tax savings. You can learn all day long and you're not going to get any tax savings from that. It's the implementation piece and the correct implementation that you start to see those tax savings. So that's kind of the key. The implementation piece is just as important as the learning piece. But then when we also break down that implementation piece, it's like, how are we doing it correctly? I kind of give the home office as an example. Home office is definitely a completely green light. This is something that everybody should be doing. This is completely legal in the tax code. But there's ways to abuse it. There's ways that you can implement the tax or the home office deduction incorrectly that now makes a legal strategy illegal. And so that's the second piece of that implementation side.
Okay, yeah. So it's having the wisdom and the understanding and the team that has that to how to implement the business plan and implement the tax savings. It's not just the knowledge of it, right? You got to take the action and the nuances there. Is that a fair summary for that? Number two?
Yeah.
Okay, great. What's number three secret for minimizing tax for a small business, or one that you're like, hey, this is one that maybe people miss sometimes, and like we really want to let them know that besides maybe something like the home office or anything kind of come to mind right now?
Yeah, I think, when you're a business owner, there's a foundation that you have to set in your business. And that foundation is going to be what you build everything upon. And so, as a business owner that's active in their business, we often look at this idea of an S corporation. And we call it kind of the S corp our foundation. Now, if you're into real estate and you're passive and in those types of areas, we're not talking about S corporation. But as a business owner, you get hit with self-employment taxes on 100% of your income. And so the S corporation is a structure that we can set as your foundation, get tax savings from just that implementation, and then build off of that. So when we look at kind of this foundation of your business, it's making sure that we're set up correctly. Are we set up as a LLC? Do we set up as a sole proprietorship? And then how are we electing to be taxed? Are we going the S corp route? Does the S corp make sense or does it not? And kind of going through those waves of finding, okay, what is that foundation? Because I see so many business owners that just want to get rolling. You're an electrician that has been working for somebody else. You've been doing side jobs, and now you want to make it a legitimate business. So you just go out and start a business. You don't have an LLC. You don't have any structure set forth, but you're out there running your business. And now you're starting to see profits, and profits that you never thought you could even imagine, because you're a business owner now. You're not just a W-2 employee. And they look back and they're like, oh man, I don't have that foundation set. I'm paying so much in taxes, but I don't have the foundation set that allows me to create that road towards tax minimization. And so now they're backtracking. They're going back. They're changing those things now and making those adjustments moving forward. But my hope is that we can get in front of people before they make that decision. We can help get in front of people to understand this idea of tax planning, so that when they think of taxes, they're not thinking, see my accountant in April and prepare and file my tax return. They're thinking about tax planning. And then that year-end reconciliation of sending that information to the government is an after fact. That's the piece that comes last. Important, required by law, but tax planning are the things we do between January and December. Tax preparation is an after the fact, just reconciliation of sending documents up.
Okay, so let's talk about that for a second. Maybe the services that you're offering, Mike, as a CPA. So there's the bookkeeping, there's the profit and loss statements, there's the actual tax return itself, there's the entity formation. Walk through some services that you guys offer, and maybe for some listeners who are considering some of this stuff.
Yeah, so we kind of have a three-pronged approach about how we do things. We have our podcast, which is always our starting point. Tons of free content, tons of ideas, strategies getting thrown out there. The second piece is our software. So we've built out a proprietary tax planning software made specific to business owners, and that's called Tax Elm. And so Tax Elm is for those people that maybe have an accountant that does prep and filing, but doesn't do any tax planning with them, or are working on themselves and they don't have that tax planning piece. We come in and we're that tax strategist that's part of your team. You can still have another CPA that does that prep and filing, but we're that tax strategist in it. And so as part of Tax Elm, we have a training program. We go through strategies. We have live implementations. We have blueprints that show you, okay, what strategy should you even be focusing on, along with unlimited access to our team, all sorts of things on that side. And then if someone says, okay, that's great, but now I want you to do my bookkeeping, I want you to do prep and filing, we have a full service firm on the back end that can service clients on that route. So I always say, kind of wherever you are on this journey, whether you're just getting started or looking for free content, we got that. If you're saying, hey, I want that strong tax strategist on my team that bounce ideas off to learn these strategies, to implement them, but I still want to kind of be hands-on on a lot of these things, we have a software that's perfect for that. And then if you're like, clean my hands, I don't want anything to do with this, that's kind of where the firm comes into play.
Awesome. I think that's great. And it's great to give people a chance to slowly get to know you, like you, trust you, all those things, and work up to where they want to be. And things change too. Sometimes they are more active and they grow and they want to be more passive. By the way, learn more about Mike and all the services by starting by going to taxsavingspodcast.com. That's taxsavingspodcast.com. Back to the S Corp. So let's say you are starting to grow your S Corp now. You got the S Corp, you got the foundation in place, Mike, and trying to hire employees, right? So now you're gonna have to do like legit payroll, not just the payroll just for yourself for the end of the year, right? Talk about the best way you've seen people do and implement the payroll. Are A, you guys doing payroll, and or B, what are some good groups that you would recommend for that?
Yeah. So when it comes to payroll, I always recommend, there's a lot of software out there now. So the idea of doing payroll by hand is no longer in place. No one's doing paper. No one's filing, sending checks into the government. If you are, I think it's time to revolutionize that, just because there's software out there that's cheap, reasonable, makes this so much easier. So our firm side does payroll. Within Taxation, we have a preferred vendor network that whatever you may need that we don't maybe offer, we refer out. And so when we look at payroll, it's not something that we do much in-house, but more so if you're, again, in that do-it-yourself type role, but need a software to help along that line, we work heavily with a company called Gusto. And then for those that are saying, hey, I don't really want to do hands-on payroll, I just want to have someone that takes it over for me, we also have a partner that works heavily with small business owners, providing more of that hands-on payroll service. That's the only thing they do. That's 100% what they specialize in, and have really kind of been a good resource for our members in our software as well as our clients.
Awesome. But by the way, I use Gusto, so that's good to hear you, right? So it's what we're using, and it's been pretty seamless and great so far. Mm-hmm. And I moved from California to Florida recently, about last year. And so we're like, oh, should I switch it up or not? But I'm like, okay, I think they got me here. And then I got this new Florida like state like unemployment tax or something, like, I don't know what it said. I got it sitting over here. I'm like, wait, what is this thing? Like, and they're like, I had to do these certain things, and then by this certain time. And so I'm almost like, oh my gosh. And then I have my CPA that's back in California. And so what's the other thought of getting a when someone moves to a different state, especially such a big move, Mike, and where, not only is it 3 hours difference, and CPAs are busy everywhere, right? No matter what, especially the good ones. But getting that state specific CPA or that state specific bookkeeper or that state specific, expert in payroll, like, any thoughts on that side of things? And I'm really asking for myself, but I imagine some people are going through the same thing.
Yeah, I think that, that's typically what people are used to, is saying, like, I can only work with somebody that's a CPA in my state that, is right down the road from me. And so a lot of times they get locked into relationships that it's not the best accountant for them. It's not the best CPA for them, but they're convenient. They're local, they're down the street, but that doesn't mean that they're the best ones for them. And so I would say a few things. We're a firm, our back-end firm services clients across the country, and our team is scattered across the country. So it's important that, sure, if you're working with a company that is not local or a virtual company, it's important that they have experience working in multiple states. That's vital. But if you're working with a CPA that is local, and now you decide to move, there's a good chance that CPA doesn't have any clients in that other state. And so then that could cause some conflicts, some issues that you have. So, I would say, do CPAs need to be local and operating only out of your state? Absolutely not. We've proven that since 2013 when I first started servicing clients across the country. But you have to be with the right person, because it could be a local CPA. That doesn't mean that they're going to be good across multi-states. And so it's just kind of doing that interview with whoever you're working with to say, like, hey, is this something that you have experience with? Are you good working in that state or wherever it might be?
Yeah, it makes sense, Mike. How about like bookkeeping and like, I think payroll, you already answered that with Gusto, right? All that, it's across the country. But how about like bookkeeping? Any thoughts on that? Or is that just, you just reconcile on those numbers pretty straightforward?
Yeah, bookkeeping is, from a state-by-state perspective, still relatively the same. We're talking about financial statements. Where you get to more state specifics is, if you have a product or service that's subject to sales tax, obviously that's important. And so sales tax is a whole nother beast. We don't deal anything with sales tax, but again, we have a partner that we work with that all they do is sales tax. Cool. And so I think it's important to just know, first off, understand your business and what's taxes are you even subject to? Do you have employees? Is your project subject to sales tax? Getting that foundation of an understanding of taxes from a high level. You don't need to be a tax expert, but from a high level, understanding what taxes are available to you, that helps start that planning process.
Awesome.
Because I don't know how many people, even in our software, come to us with zero understanding about taxes. Like we talk about a basic concept, maybe it's like estimated taxes and you having to pay quarterly or whatever, and they don't know anything about that. And so my first foundation is starting there is we need to have that foundation of tax understanding.
Mm-hmm. Perfect.
Again, not a tax expert, but some foundation of how do taxes work? What am I taxed on? What does that look like? Because before we start tax planning, you got to have that foundation set.
Absolutely love it, Mike. By the way, taxsavingspodcast.com. Let's shift a little bit, Mike, if you want to learn more about Mike. Let's shift a little bit. So part of what we focus on is helping people have clarity and a plan when it comes to ultra high net worth individuals and or just individuals that are about to be, because they're selling a business or cryptocurrency, real estate. And the old way was, we call it the blockbuster 1031, right? The 45, 180, the shotgun sprint. It also doesn't work for cryptocurrency or primary homes or business sales. We have something called a deferred sales trust that we love, and we've had a chance to help a lot of people with over the years. We call it building a capital gains tax exit plan. And sometimes you do a little bit of both. You do a partial 1031, a partial Delaware statutory trust, and a partial deferred sales trust if you're selling investment real estate. But I'm curious, what would you say in your profession experience? What's been the biggest frustration when it comes to a 1031 exchange?
Yeah, I think sometimes it's just understanding what is available out there from a 1031 exchange aspect. When we look at tax planning, I break strategies into two different pieces: what I call core tax strategies and advanced tax strategies. And core tax strategies are strategies that are available to anyone, easy to understand, easy to implement. Most of the times can be implemented by themselves as long as they get a core understanding of what's available. So these core strategies are things that I think everybody should be implementing. The advanced piece is when things get a little bit more complex, typically reserved for those higher income earners, those going through an exit. An advanced strategy would be exactly what you guys fall into. And I think those advanced strategies, the key when we're looking at advanced strategies is understanding, one, is the strategy legal? Obviously, that's the first hoop you have to jump through. But the second piece is who is doing the strategy. And that's the key part. Because again, when we look at a strategy and looking at that implementation piece, you can take something as simple as an home office, and you can make it illegal. And so that implementation piece is so big in knowing and working with partners that have been doing this for a while, understand it front to back. Oftentimes with advanced strategies, they focus solely on kind of one main strategy. It's the key of, is it legal? Get past that. Once you've gotten past that, is the partner I'm working with the best partner for this? Are they the best in this strategy, in this space? And then we can start to go down that route. With advanced planning, oftentimes more complex. There's likely going to be some type of charge, investment, cost to it, legal structure, whatever it might be. And sometimes bring it with it some risk. And that's why that partner piece is so important, to help minimize that risk piece.
Yep, I just couldn't agree with you more. And by the way, if you want to learn more about the deferred sales trust and the track record and our team, you can go to capitalgainstaxsolutions.com. We recently did a cryptocurrency exit. This is before the crash of crypto. Bitcoin hit 54,000 a coin. We helped the client exit 5 million into the deferred sales trust, and then it crashed down to about 15,000 a coin. Now, as of today, Mike, we're over $60,000 a coin, right? And so we're looking at using the strategy again for multiple exits. She actually bought Bitcoin for 50,000, went to 50 million, had never sold the coin until she found us, because part of it, because of the capital gains tax, but also the team to implement the plan of investing afterwards, which into businesses or real estate. So I'm curious, like when you're looking at cryptocurrency and some of these massive gains, like if someone comes to you, Mike, and is like, hey, I need an advanced strategy for deferring this capital gains tax on cryptocurrency, what comes to mind, Mike?
Yeah. So, when it comes to advanced planning, I think that first off, it's understanding what are we selling. So, if we're looking at advanced planning in an exit strategy, there's a lot of options out there. If you look at real estate, you have what you guys are offering, 1031 exchanges, various different things there. And the second piece is, what does the gain look like? Because that's going to bring some strategies into play, some strategies not. Because if we're looking at certain strategies, they might have a hard cost of saying, okay, to set up this legal structure to do these different things, it's a minimum $100,000. Well, if you're selling an asset worth $250,000, does that make sense? Probably not. And so it's understanding those types of things. And in the goal that we have when a client comes to us and says, hey, I'm looking to sell, the first thing is, one, come to us before you sell, ideally way before you sell, so that we can start to build out this structure. But that's just understanding, okay, what is the asset? What's the gain looking like? And what do you want to do with the funds afterwards? And that's going to kind of go down the route of, okay, what strategy are we going to lean towards? What strategy are we going to look to get in front of them?
Okay, great. So I got the answer for you, right? I'm selling $10 million of Bitcoin. I'm a married couple, right? I'm married, and my spouse and I. And my gain is it's 100%, right? It's basically, I bought it for a cent, right? So it's all gain. I'm in Taxafornia, right? So I'm facing state, federal Obamacare, unless it's real estate. Let's just say it's 3.3 million of tax liability, right? I don't want to spend it on anything personal, Mike. I just want to invest it, keep it rolling. And what would you say? Like, I'm curious, like what would anything come to mind?
Yeah, so kind of our go-to in that realm, just from that basic understanding, would be idea of a charitable holding company, charitable LLC. If you kind of look at the idea of when Mark Zuckerberg said he gave away 99% of his Facebook stock, we believe or understand that this was kind of the structure that he set up when he utilized that. Again, very complex, very different ways to do it, but that's kind of the route that we'd go down in that fact pattern.
Okay, cool. Excellent. I appreciate you sharing that. We have something called a deferred sales trust. By the way, I don't know if you've ever heard it before. 27-year track record, thousands and thousands of closes. My business partner is a CPA and a tax attorney. He created it. And my role is a trustee. And you don't have to give it to charity. No life insurance required. It's an installment sale with the trust. So it's based upon one of those core strategies of an installment sale, actually really easy to understand. The trust and the trustee add a little more complexity. Expenses about 1.5% to 2% on a recurring basis, about 1.5 to set up. But we've done it for real estate, business sales, cryptocurrency, stock, primary homes across the country. And it's super flexible for the reinvestment of the funds back into other deals, kind of like a self-directed IRA, back into real estate that you can run, back into businesses, or you can be passive and just be retired. And so we've got a lot of traction on it. We wrote a book on it called Building a Capital Gains Tax Exit Plan. And we had Kevin Harrington from Shark Tank, who hit number one bestseller on the book. But I'm curious, had you ever heard of this before, Mike, before our call? I wonder, because some people get confused with the Delaware Statutory Trust because it says it's DST, but had you heard about this before?
You know, I've heard about, and I don't know if it's been labeled that exact word, like somebody else using a different term to describe it, but definitely heard about kind of the overall structure of it, but have never dig into the full details.
Yeah. Oh, cool. Well, yeah. If you ever want to geek out about that and meet my CPA business partner, maybe we can do that on your podcast too. That being said, are you ready for the lightning round? We're running out of time.
Let's do it.
All right, Mike, knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget make sure to tell yourself to do?
Yeah, the biggest thing is plan for growth, and that's going to lead to, plan of where you want to be and build your business to get there instead of the opposite of way around. How I oftentimes build, and I see business owners all the time build, is they get into their business and they get overwhelmed with the day-to-day, and now they're up to their neck, unable to grow because they're so stuck.
Okay, very good. Question number 2. What's your number one book you recommended or gifted the most in the past year?
Millionaire Fastlane.
What was the number one takeaway?
Learning more about what you guys do.
Okay, very cool. Question number 3. What are you most curious about right now?
What am I most curious about? That's a good question. I think just kind of understanding where tax aspects go. There's a lot of tax laws kind of up in the rear right now. The Congress is moving forward, and so today is understanding. Okay, when's this law going to pass? If it passes, and what does that look like?
That's very good. Next question. Number one way that you're using ChatGPT for your business or day to day?
Marketing materials.
Next question. Number one leadership quote or theme that you strive to live by?
Got me there.
It could be a theme. It doesn't have to be an actual quote. Like just like what's a theme that kind of comes to mind.
Yeah, I think one theme is this idea of delegation. And just to kind of point on that real quickly, the idea of, in order to be able to grow in your business, you need to understand how to delegate the things you shouldn't be doing properly.
Absolutely love it. By the way, as a designer, there's like the 4 Ds, right? There's design, there's delegate, there's decide, and there's doing the work, right? And we're always in one of these 4. And ideally, you're in the design and delegate, and you're not in the doing and deciding the work. Little hack that we do with those. Next question, or second to last question. If you could do one thing by the end of this year, the biggest domino to knock over for your business, and that domino knocked over, and it would make everything else even that much better. What would anything come to mind if you could accomplish that by the end of the year?
Yeah, the biggest thing we're working on right now is finishing a book.
Awesome. Do we know the title of the book yet?
small business tax savings.
Awesome. Last question, Mike. And also I want to, first of all, thank you for being on the show. I want to encourage you to keep using your gift of efficiency, constant improvement to help people create and preserve more wealth, especially as it comes to minimizing tax for small businesses. The next 20 years will prove to be the biggest wealth transfer in the history of the planet, as you're probably aware of, the $84 trillion approximately for some groups. And the question will become, will the hands of the government or hands of the people? And it's freedom for the capital of America. So we need people on the front line like you every single day, helping people understand what's available so they can create and preserve more wealth. And so keep using that gift. But for our listeners who want to get in touch with you, what's the best place for them to find you? And the last question too is, how do you best stay centered in your values? And what do you practice to do that? And how do you also stay encouraged to charge forward to reach even higher heights?
Yeah. So best way to reach us, taxsavingspodcast.com. You can find our software at taxelm, TAXELM.com. As far as just keep driving forward. I always kind of, in this hurts me in certain areas, but it's just, I have this mindset of, hey, what if things fall apart tomorrow? What do I need to do? And so that is a constant drive to keep continuing, to keep improving, to keep pushing that limit of where can we take our businesses.
Awesome. Mike, I want to thank you for being on the show. Thank you so much. I also want to thank our listeners for listening to the episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax referral options. Also, sometimes they struggle with clarifying, minimizing tax for their small business, right? And not having a clear plan is the enemy, and using a proven tax referral strategist like Mike, the last name Jesowshek, a CPA, to help you with that is an amazing way for you to create and preserve wealth. Also, checking us out using a deferred sales trust, an advanced tax strategy to exit highly appreciated multi-million-dollar exits. Now, you need $1 million gain, $1 million net proceeds to make it work. Also, check out and go to capitalgainstaxsolutions.com for that. Also, check out the best 1031 exit plan. You never want to get in a 1031 without a backup plan to be able to save it. We just released the full, not only course, but also the exit strategy, as well as the actual service for the 1031 with our strategic alliance, and then the backup plan with the deferred sale trust in case it fails. Friends don't let friends 1031 exchange without a backup plan. Go to experttaxsecrets.com to learn more about that. And with that being said, please rate, review, subscribe, share this with somebody who can help out. We appreciate all of our listeners out there. It means the world to us that you are a part of the listenership. And so